All right. This is a trading recap for AMD. We got higher lows for higher highs starting off. Then we'll pull our range from top to bottom. We got our first deviation and second deviation right there. So we're going to pull down. Now here, back in 2024, you would have got finessed if you tried going for this tap. Thinking it was a Model 2. When actually it actually turned to a Model 2 distribution. Could have shorted that down. I think that was like a 5-hour trade. Comes down. Still within the range. We got a nice third tap. So if we zoom in on third tap. Building up to this third tap. Look at this crazy liquidity. Crazy liquidity building up. Very nice. We can even pull vol tool. See what's up with that. Nice P shape. Now here, market makers made some supply on the lower time frame. Made some demand on the third tap. Comes up. Wicks of the supply comes down, makes a low time frame / mid time frame accumulation on the demand before going higher. So the degen entry was actually here at $70, which I did not see at the time. We entered actually at the $86 on the mid time frame accumulation confirmation. And it just went up from there. Now 1 or 2 months go by. Yeah, like 1 or 2. We see this another accumulation. This is like a mid-time frame accumulation going up. We got higher lows for higher highs here as well. We see here we got even cleaner deviations here on some demand. Wick deviation, wick deviation, wick deviation. And we got a super aggressive pump up. Right here, since we had our position here at $80, we trailed it to these lows. So now our stop loss is at 125. So from 80 to 125, that profit was our stop loss. So we're running risk free now. And we would have had the confirmations to add, since this is another accumulation inside this higher time frame accumulation, which also means that we get even higher advances up, which is what happened here. During this time, we got the news that OpenAI is collabing with AMD. And then we also got that huge surge of market makers in retail trying to long the position that shut down Robinhood for a couple hours that day. Now, on the super high time frame, on the monthly, if I were to short, which it looks decent, if I pull range from top to bottom, I like how market makers wicked it at some point, but then came back down into the DL tool, which makes me think that they're going to do that also with the third tap. I'm not that good, but negative fibs. But it looks clean though. Probably wicks right here. Probably comes up here, wicking 230, comes back down, and then gives us the short at 280. That short would come all the way down. Technical target would be at $50. So from 250 to 300, shorted down, boom, to $50. The position we got running right now, the technical target was 213. So if you accumulated at $86 and $131, sold at $207, you would have made about, you did the math, shit. And then previously, from the previous entry, if you got in at 87, yeah, I got in at like 87, stop loss would have been at 68. It's like 10-20% drawdown for 6R. So you would have got double 6R. This is like a 7R. Even more confluence besides this insane liquidity curve as well on the breaker structure was this previously back in 2022 going to 2023, looking literally the exact same as this accumulation. Higher high, higher low, range top to bottom, touches equilibrium, second tap. Insane work right here, third tap. Liquidity came down, scooped liquidity, literally wicked everybody and their mom off that. Oh my gosh. Breaker structure back up. 2-3 years ago, that would have been the entry at $60. Stop loss would have been at shit $56, bruh. Look at this. Oh my gosh. Oh my gosh. Wow. That's crazy. What's the vol 2 looking like on that? What's the vol 2 looking like on that? Let's see. Oh, it might not show me. It's too far. Yeah, too far back. Darn. It's all good. Crazy. 13-hour trade. $60 would have sold. Technical TP was at 140. Looking crazy similar to this. So, damn.